he carried the note on a 123 unit property. When those are not impossible, but they're pretty rare. And so we felt really excited about that, and it really did help our numbers.
Yo, what is up, everybody? My name is Matt Drouin. I'm the host of the Go Big Live Real Estate Investors podcast. Before I get into introducing today's guest, I do want to put out there a reminder. I've been looking at our stats on our show. We have a wonderful amount of subscribers and people that tune in every week, but our subscriber base has flatlined over the past few months, and we need to break through a new ceiling. So please, if you get value and enjoyment out of the show, leave a rating and review either on podcast or Spotify or wherever you get your podcasts, as well as dropping a comment down below if you're watching this on YouTube. Any questions you have, even words of encouragement, that really helps the algorithm push this out to further people. Remember, we do this show for free, and we're doing it from the standpoint of trying to put value out there, and experienced real estate investors looking to bust through the ceiling and to take their real estate business to new heights by doing larger commercial multifamily. So, done with the housekeeping right now. I'm psyched out of my mind to have on our guest, Mr. Colby Fryar, who's principal of Mountain Bridge Capital, who's a value-add multifamily investment firm. They are focused on 100 plus unit value-add multifamily. They currently have 240 units under management in Tucson and Phoenix is their areas of focus for their acquisitions. Colby, thank you so much for being on the show, man. I appreciate it.
Man, I really appreciate the opportunity. Thank you, Matt.
All right, first question is a doozy. You were born, now you're here. What happened in between?
Yeah, so I was born in a small town and raised in a kind of a rural environment. Grew up doing normal things, playing basketball. I think I was pretty analytical from an early age. Knew that I was good in math, and I think that kind of ended up being really the hallmark of what I was going to be doing later on. But I got a civil engineering degree and a master's in civil engineering from the University of Arizona. My first degree was from New Mexico State University, and then from there got a job working in the engineering field for many years. I've been doing it for 25 years. Transitioned, started doing single family 2013, just kind of as a hobby. My wife started seeing some houses, and we came in right, post Great Recession time. So it was starting to dwindle, the amount of homes. They had mostly been bought up, but we got lucky and got a couple. Ended up buying two here in Tucson, and then through a crazy happenstance, ended up buying a couple of turnkeys in Alabama, single family properties, and from there developed the burst strategy, developed a team down there, Huntsville area, and bought some great properties that helped us get into multifamily. Really, I mean, those were really the foundation. We got a lot of value out of them. Started in multifamily in about 2020, and got my first 12 unit that year, and shortly after 123 units. And then 4 years later, we just closed a 94 unit here in Tucson. So that's really our main focus is Tucson and Phoenix, but also we own in Las Cruces, New Mexico, and Albuquerque, New Mexico.
Excellent, Colby. I mean, it begs the question because we've had a tremendous amount of engineers or recovering engineers as guests on our show. To name some, Mr. Michael Blanc. Let's see here. Also, got our previous. I think probably 4 of our previous guests have come from an engineering background, and you mentioned a team sport. There's not a lot you can do on your own, and when you're looking to scale and doing larger deals, I guess what pushed you to kind of get outside of that hyper analytical, wanting to analyze the death out of every single thing and really push your business forward?
Yeah, that's a huge challenge for engineers. And it was for me. I was a little bit on the introverted side too. So the big push for me was starting my meetup here in Tucson. and that was a big change for me and allowed me to start building a network of people and just getting out and meeting other people that were doing similar things was really cool. Um, and getting a mentor and all those things that are necessary to push you to kind of get out and meet people, develop relation. This is a relationship business, right? So you got to have a team, you got to have a network of investors, and that was kind of the tipping point for me, getting over the hump, as they say.
So before we dive into a case study on how you did your first big deal, specifically tactically, the format of the show is to really get into the specifics on how actionable types of things our listeners can take to the street out in their journey. I want to talk about the meetup thing because we've never talked about that on the last 100 episodes we've recorded on this. Because there are people, they're like, well, there's no meetup in my town. So I tell them, well, start a meetup. How did you start that first meetup? I'm kind of curious about it. And I don't know, the first one you had, like, did you have two people that showed up or like what, just tell me about that. Yeah.
Yeah, that was a crazy time. It was, the first meetup we had was April of 2020, I believe, right when COVID hit. So I had one meetup in person, and then we had to go online. But the biggest reason there are meetups here in Tucson. There's a ASRIA meetup. It's really good. I do get to go to that now, but at the time it was I had really young kids and I had to watch them on Tuesday nights, the same night of that meetup. So I never got to go. And I was like, well, I gotta do something. So that was really the start of it. And we met at a little restaurant, kind of a brewery type place close to where I live out in Vail, Arizona. And I think there was four. I think including me, there was a total of four people. So um, none of which ended up continuing going, but I still have contact with those folks, and it's been a great relationship overall. And it took a while to build it up. It started small, and it just kept it going through the pandemic. I think we went for a whole year meeting online. And so most of that network was kind of everywhere, right? It wasn't really local. And so it was like starting over after that year, because then we went in person. And I think I probably had maybe six when I started back, the local meetup. And now today it varies. Sometimes I do only have six, but I'll have 30. It depends on, I think a lot of it's timing with what people are doing and what they're interested in. Maybe the speaker isn't quite what they were interested in or something, but it has grown. It's been a huge boost to my network overall.
Yeah, maybe not directly, but maybe tangentially, like what sort of things now that you've been doing it for quite some time now, like what benefit has it given to you, like direct, to your business, either indirectly or directly?
Yeah, a lot of benefits. The biggest one's education. I think it's been cool to see people working together and doing deals together. I've partnered with a lot of people in my meet. Not a lot, I shouldn't say a lot, but a, a good amount of people came from my meetup that I ended up partnering with, um, and have invested in my deals as well. Some of that took a lot of time, but over time, it has really been beneficial for that. But it's just really cool. It got me. The biggest thing was getting out of my comfort zone and just getting around people and um, because I was pretty isolated, honestly, before that. And so it was the thing that pushed me into the business, and it's been really fun. I enjoy doing it and going to all the meetups. I go to other ones, um, and engage with people, and it's just such a help. Everybody tries to help each other in this business, I've found, which is really cool. There's not a lot of people out to get you, and not a lot of fakes, so it's pretty cool.
Yeah, 100%. And yeah, I mean, for those of you out there who are like, hey, there's no meetup in my town, like all you got to do is find one other person that can commit to meeting with you like once a month at a specific date in the calendar, right? And this is exactly how I started up a meetup with my friend Brett. We called it the Coffee Club, and it was once a week, Wednesday at 7 o'clock at a local coffee shop. And Brett was like, Matt, don't you think weekly is kind of like excessive? And I was like, could you get coffee with me once a week? And he's like, yeah, absolutely, I could. I was like, well, if nobody shows up, then it's just two guys talking about real estate. And
Yeah.
in a group from from like 5 to 15 to 30 people, they had to actually kick us out of the of this coffee shop because we ended up taking the thing over and move it to a different venue. And yeah, it's like the relationship infrastructure I developed along that was invaluable, and I made a ton of great friends that allowed me to like really change my rooms, which was absolutely fantastic. And before we do launch into the case study, I do want to ask you, because this is a question that's been bugging me a lot. Have you ever raised capital from somebody that you didn't know?
That I didn't know. Uh, I think I have built a relationship with all my investors. Some I have known for a shorter amount of time than others, but I would say that I've known most, if not all of them. There may have been one or two early on that I had a brief relationship with, but I think they came through referrals and got some trust and some knowledge of me through other sources. And um, but it, even those folks, it took some time to build the relationship before they invested. It wasn't like they just said, "Hey, here's my money." But yeah, that's an important thing because you have to show that you have a relationship when for any non-accredited investor. Well, accredited as well under the 506B rules. You have to have an existing relationship with the investor, or it can mean some issues down the road for sure.
Yeah, absolutely. My point in asking that rhetorical question is that this like find the deal and the money will come thing. I'm trying to kill that saying, because you can have you can have the best deal in the world and start walking up and down the street, go to the mall, go hang out in the bank lobby, and even if it's got a 50% internal rate of return, I guarantee you're going to fail in your attempts to raise the dough for that deal if you don't have that relationship infrastructure in place. So case closed,
So
people.
true.
Yeah, stop saying it out there. Stop saying it on the Bigger Pockets forums as well, because I know that Colby and I are pretty active on the Bigger Pockets forums.
Well, yeah, and I'll even go further than that. Most of my investors I have known since literally I was a kid. So that's it's yours. And then it's not like you just go to them and say, "Hey, bring money to my deal." It still takes time after that, so they gain that trust. But it really is, they have to know you and trust you, and that just takes it's a long time. So you can't just go to anybody and just yeah. Good point there.
Absolutely. All right, cool. Colby, case study time. Let's talk about your first bigger deal. I guess what was the sort of seminal? Backing up a little bit, what was the seminal moment where you're like, okay, maybe your wife led the charge with getting into this real estate investing thing altogether, but I guess like what was the seminal moment where you're like, damn, I need to scale this thing. I can't keep going all in the same path as I've been going.
Yeah, it was probably 2019ish. I was looking at multifamily deals and trying to get in, trying to figure out how to do it, and I realized that I was just not making any progress. And um, but at the same time, I had a couple of deals in Alabama, and I realized that it was going to start to be harder to scale because I didn't have a lot of capital, and I wasn't seeing a lot of those good deals coming. And so that's when I kind of made the shift around that time, and it was really to get a mentor and a coach that when I turned it around. I mean, that it took me about I probably looked at a lot of deals over a year or two, and then when I got my somebody to hold me accountable and follow a plan. It was like 6 months. Uh, that's quick, right? I mean, I wouldn't say anybody could just do that, but um, I think that was a big impetus for me to get started.
Mm-hmm. Absolutely. So let's talk about the Las Cruces deal. How did you find this deal? Tell me about your methodology for, or maybe it was just gorilla, and it just like landed in your lap. Tell me about that.
Yeah, so that was, we looked at a lot of deals, and that one came up. It was on the market, then taken off. I developed a relationship with a local broker here in Tucson, and so they were looking for deals here for me in Arizona. And then through our relationship, he knew that I was from New Mexico and had gone to school in Las Cruces, and he thought, well, what the heck? I'll just throw this deal by him and see if they might be interested. And so he did, and we looked at it, and the numbers worked. It was a great value add, but it was really through relationship, building that relationship with the broker. That and again, getting out of my comfort zone, going out and talking and meeting people, not just running numbers from a LoopNet ad or something. Those relationships are really key.
Was there a framework that you developed from this experience with this broker bring you the deal? Did you have like a systemic or systematic follow up with this broker? Like, how did you maintain like top of mind with them, and how do you use that going forward with your other broker relationships?
Yeah, that's important. Really important is to continue to nurture those relationships. I think you got to get in front of them. You got to meet with them. I think the biggest thing was having lunch and showing them, that we're a serious team. That that we have the capital backing and are able to raise, and we're able to close. If you can, the biggest thing for brokers is they want to know that you're going to close. Can you close the deal? And so if you could show them that, then they're going to work with you. And if once you do close the deal, then the relationship becomes easier because they know you can do it. And so they're trying to help you find the next one too, right? And other brokers, they that's important for them too. They want to see that track record, and so you could show that, and now you can potentially go to another deal, and it gives you confidence too, right? You once you do the first deal with the broker, then it's easier to develop those relationships with other brokers, but you do have to talk their language, learn their language, and um, but it's a relationship business totally.
Now, let's talk about this deal got brought to you. Take me a step from there. How did you run the numbers on this deal? Was there rent comps or right down the street that showed a margin between the contract rents in this property and those that like just kind of run me through that like leading up to your negotiation strategy on this deal?
Yeah, so I think the price was a little bit higher than what we thought would work, and through negotiation we were able to get that down. A big piece of the puzzle was the financing, because it was a portfolio property, and the owner was not willing to release financials. We were able to do a seller carry on it. So he carried the note on a 123 unit property. Those are not impossible, but they're pretty rare. And so we felt really excited about that, and it really did help our numbers. We were able to bring our price up a bit to meet him a little more toward the purchase price that he wanted, and it also helped us. So it was kind of a win-win. Um, I think the biggest thing for him is this property was a headache, and so he wanted out. Um, Being newer to the game, we didn't realize how much of a headache we knew a little bit, but we didn't know the extent of it. But with these opportunities, the reason they're selling it for a reason, right? And they're willing to give you these great opportunities because of that. So that's been a big lesson. But don't want to jump the gun, but love to get into that more too.
So let's talk about the capital stack. So there was some carry seller in the seller carry in the capital stack. Tell me about the rest of it: the total transaction amount, the seller carry amount, the amount of equity you had to raise. Was there some rehab funds you had to set aside to bring this deal up and stabilize it?
Yeah. So capital stack was 75% loan to value. So we had to raise 25% for the down payment. We budgeted about $1 million for CapEx. Um, and I think we raised about a little over 2 million. It was a little short. Um, that's been one of the biggest challenges on the project has been the capital. Well, I should say it was a challenge early on. Much better now that we've been cash flowing for some period of time. But I would say that's been one of the bigger challenges, along with when we got in the property, having a lot of delinquency, a lot of tenants that weren't paying, and also just a lot of crime and homeless and squatters, things that we really didn't quite anticipate the level that we were getting into, and having to evict a lot of tenants all at once. So,
Mm-hmm. So this is a $2 million raise on your first larger deal.
first larger deal, yeah.
Yeah, that's a big one. So, kind of like, how did you break that out from a strategy, and kind of tell me about the tactics that led up to you being successful in bringing this deal across the finish line to the closing table?
Yeah, it was really a culmination of a number of things. Just the network was what really a key driver in that, bringing in the right team members to help raise the capital. Um, and I raised a good chunk of capital, and everybody on the team really pitched in. There's 5 partners on the deal, but one partner in particular really helped, and got to, I think towards the end we were lacking a little bit of capital, and he was able to bring in a couple other folks to help us raise the money and get us across the finish line. So it was a team effort for sure.
Excellent. So, tell us about your experience on the portion you had to raise. What did you do specifically, and what would you do differently going forward?
Yeah, so it was relationship building, which I had started to do with my contacts, just getting the word out about what I was doing, letting people know, friends, family mostly, and then people that I met through my network, through the Meetup, and also through my mentorship program. A lot of my partners are warriors too, in the warrior group, and I had a good relationship with a lot of those folks, and developed relationships through the warrior network. Um, and that was really key, having those relationships, and raising. It was challenging, um, but I've learned that, like I said before, I think it's those relationships that you've had for a long period of time that really, college, even grade school, people that you grew up with. You really need to reach out to people and everybody that you meet, and just let them know what you're doing, especially friends and family, and start getting them involved in what you're doing. Newsletters, and pick up the phone and call them and let them know, and so that's been a big lesson for us. But another big lesson is that you need to have people on your team that are really proficient at raising capital. So it has to be a team effort, and it's huge to have those relationships with people that are really good at raising capital.
Colby, what did your script look like on that raise, and how has it changed since then?
Yeah, I think you learn. Uh, it probably hasn't changed as much as you would think, but I've definitely, um, you know, just from the experience of the first deal, I've learned how to better manage, expectations for the deal. And I think it's more of a trust that people understand that we've been through this before, right? And I'm part of the asset management team, and so I'm a key principal um, on all my deals. So I'm directly involved in what's going on the ground, as well as raising capital, and so I'm able to tell people, kind of more realistic picture of what to expect when we get in these deals, and so I think that's important to be transparent and upfront and tell them, hey, it could be a year before you see distributions. This When we do these properties, they're value add properties, and it takes time to turn these around, but we will get it turned around. And just them knowing that you've done this before, and you've turned these properties around, you've stabilized them, you've got them cash flowing. That gives them the confidence that these folks are going to take care of my money, and do what's necessary to get our return, to get our distributions, and get the returns on the property.
In writing the ship, Colby, because some other podcasts appeared on, you've talked about executing the business plan and property management best practices. Tell me about how what you learned in this deal, what you experienced, and maybe some horror stories that you learned from that added to your many battle scars being a multifamily sponsor.
Yeah, I think it's some of the biggest lessons are when you're going into these deals. You really got to know what your tenant base is like. You've got to look at your delinquency. I think that's a big one. Uh, when we got into this property, we had I think the Las Cruces property was a little different, and maybe there wasn't the level of delinquency that I um, that there could have been, because there were a lot of tenants that were on programs. They were getting assistance, but they were literally destroying the property. I mean, and the property was in such disrepair from years of neglect, and just kind of throwing band-aids on things, and not doing proper maintenance. That it's hard to get a quality tenant there. They're not going to want to live there, so they had to bring in people that were homeless, and there was a lot of problems there. I think I talked to an officer early on, and he said one of our property there's seven buildings. One of the properties there is one of the worst properties he'd ever seen. Um, and that was quite an eye-opening event. But we through that we had to evict probably 50% of the property right away. So we had a ton of vacancy, and we had to get in there and get things turned around. So that was a major focus for me, was to our property manager was about to give up on us. They didn't want to handle the renovations because there was too many. So I got, having my construction background, engineering background, and project management, I brought in three contractors and got the units renovated, turned, and then our property manager did a great job of getting those leased up. And I think within 6 months, I had it turned around, and we had the property back above 80% occupancy, and it was starting to cash flow. So we're starting to see the light. But it was a lot of sleepless nights and extremely stressful period during that time.
Excellent. So let's fast forward to today. What was the outcome of this whole venture?
Yeah, we've been 3 years into the deal, and it's been a great turnaround now. I used to have to go down to the property It seemed like every 2 weeks, sometimes every week, and it's a long drive for me. Now it's every month, sometimes 2 to 3 months. It's very stable. It's a quiet property. We've renovated most, if not all, the units now, and just feel real proud about it. It's giving people a really great place to live. Um, just nice, comfortable, and they don't have to deal with all the years of disrepair and all those things. But and more importantly for our investors, it's been really cool to see the distributions. We do monthly distributions now, and we have been for quite some time. Um, so just real proud, and there's some luck in that. I got that seller carry note for the property, which was really instrumental because it's not, it's fixed rate debt. Not having that floating rate that a lot of people are experiencing right now was really fortuitous, and very thankful for that.
So is that seller carry still on the capital stack now?
It is, yeah. We've considered refinancing the property, but with interest rates as they are, it may be some time. We're hopeful that this year may see a turnaround and that things will look better, that we can do that. So that is a possibility this year that we're strongly looking at.
At least for the time being with the seller carry, you probably don't have to do annual reviews and things with it.
It's huge. I mean, the yes, exactly. With dealing with the agencies, all the requirements that they have, it's unbelievable, the amount of paperwork and everything. And uh, yeah, and it's a 4% interest rate, so it's hard to beat that. I think it will go to 6 after 5 years, but still, it's 6%, where we're looking at quite a bit higher than that now.
Yeah. Absolutely, yeah. You can't beat that with a stick, as they say. Well, you've been generous with your time. I do want to get in with your parting words of advice, and also how our listeners can get in touch with you. So, Colby, in terms of parting words of advice, like those investors that are out there that are sitting where you were sitting, with a couple single family houses, that really know that those deals, after, owning them, like, not, running it through spreadsheets and like, oh, this thing's going to cash flow $1,000 a month, when in reality cash flow is $200 to $300 a month, and know that they have to scale into larger deals. Like, what words of advice would you have that are actionable, and what they can do today, this week, this month, to bring them in that direction?
Yeah, I mean, I would say get educated, start learning the business of multifamily. I think multifamily is a huge opportunity right now that people are missing out on. I think there's a lot of fear, um, because of the way the market is. A lot of people have dropped off. People aren't doing it anymore, which is great for us that we're in the business. But at the same time, a lot of newer people aren't coming in, and I think with there's huge discounts on larger multifamily. I think people are seeing residential and how those prices are just sticking, and they're getting higher. But that's not the case in larger multifamily. I mean, we're seeing 35-40% discounts. It feels like 2008 to me on single family, when we had the big crash. It feels that way right now for me with larger multi. I think this is the time to get in. Um, it's like Warren Buffett says, when people are fearful, be greedy. That's right now, and it proves out every time. But people do the exact opposite. So I would encourage people to get educated, to get a mentor or coach, um, or get into a program and start learning about multifamily, because it's a huge opportunity that people are missing out on.
Absolutely. So, Colby, you've been so generous with your time. How can our listeners best get in touch with you?
They can reach me at Colby at mountainbridgecapital.com, and that's Mountain Bridge, like the Rocky Mountains, mountainbridgecapital.com. And I'd be glad to touch base with them. And I actually have a mentorship program as well, so I love to help people, and especially with multifamily, get them started.
Absolutely. Make sure to put that in the show notes. Colby, you've been generous with your time again, and I look forward to catching up with you in the green room.
Sounds good, Matt. Thank you for the opportunity. Appreciate it.